Here's a balance sheet strategy, and it is a little bit of just mental accounting, meaning you're looking at one specific cash flow that's going to go to one specific area. For the most part, anything that can make you feel comfortable to reinvest back into your business, I think can be a good thing. And as long as you feel safe about it, then that's what's most important. So let's take a look at this balance sheet strategy. Let's just say that you have $2 million that's in your long-term investments in your business account. And this is not a retirement account. This is a non-qualified account. It's the long-term portion of the account, and it's meant to be a liquid, but also a passive way to make money because these are publicly traded stock. For the most part, that's going to be making up this $2 million. Now, I'm just going to give an example. Let's call it a stock, but it's going to be multiple stock. Let's just say the stock goes up by 50%. And now it's at $2 million. And it's like, oh, awesome. Like, we've had a really big gain here. Two things. One thing, like, should I take some of this gain? Well, it is about 20% overvalued now. Might be a good time to take the gain. What should we do? So I could play like this. Well, let's take gains, but let's not take them all. Let's move half of it to risk-free. So we're at 50-50, meaning we have $1 million in risk-free investments, which would be U.S. Treasuries or something tied to that, and $1 million in still our long-term equity. So we're split up. That's a good strategy. It can be no matter what. This being that we locked in that 50%. We know we're already overvalued, and if we can feel comfortable that we took some of those gains. Now, here's the way that you can generate a little bit extra premium, it's called. And you can do whatever you want to, obviously, with the premium. It's your business account, but it can be a way, you know what, I'm going to use my premium that I get from my options contracts and then use it to build my business. So in this example, you have $1 million that you can now sell options contracts against that risk-free money. And the dollars are going to go into your account on the day that you sell them. Now, they're going to be locked up to whatever time frame you're on. I just gave an example on how we were doing options contracts on the May 15th contract. So it's just whatever dollar amount you get and how the options contract works. Now, one of the keys to this, just on the strategy to be upfront, is that you're only going to sell at the price that you want to buy it back. So the example is we sold 50% up. We think the stocks are 20% overvalued. If the stocks drop back down 20%, we have no problem buying them back. So that's how you set the time and the price. Got a lot of videos on cash secure puts, they're called, but this is just an example how they can work in your business. So you're only selling at the price that you want to buy back. Now, in today's markets, you can, over the course of a year on $1 million, get maybe about $60,000 pretty safely. When I mean safely, you're setting that price at the price you feel fine buying the long-term investment back. So it's still long-term money, but you are getting that premium, and you can get it probably about $60,000. Now here's something simple. We made $60,000 just on options premium. Let's put that $60,000 and hire that new person that we're waiting to hire. That new person's going to be able to clear up the schedule, do whatever it needs to do as a way to reinvest into your business. So that's kind of a simple way to think of it as mental accounting. And then, you know what? I'm going to use my options premium to be able to put it back into my business, to grow my business the way I want to. That way I don't have to take my business cash flow. I don't have to adjust my investment strategy because we were going to be going 50-50 no matter what. And we can now feel comfortable that we have some money to be able to do those things and continue to do it to grow your business.